You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-XND-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again, one final time on the on-demand side of the network. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. If I sound a little bit different, it's because I'm still coming to you from the southern studio. I picked a good week to get the heck out of Dodge. Sounds like Chi-Town has descended into the mouth of hell for a week or so over there with all that smoke coming in from the Canadian wildfire. So if I was still there, I might be getting the heck out of Dodge anyway. So we'll be hanging out down here in the southern studio for another week or so. Let the smoke and the dust clear. But the shows still keep coming at you, listeners, because neither rain nor sleet nor Canadian hellfire smoke can stop our network from its appointed rounds. Of course, if you do like what you hear, this show, any other show on the network, make sure you do throw some stars our way, or whatever platform you're listening on, if it's YouTube, alike, whatever the case may be. If you're getting it via the mobile app and the app stores, review there. All that stuff helps people discover the content. Of course, if you personally want to discover more content, then the place to go is theoptionsinsider.com/pro, or for you cool kids, haven't thrown us out there in a while, but /secret club. Get in there. Today, the last day to get your name in the hat for the June Pro Trading Crate. Don't tell the Rock Lobster. He gets all angry at me. But the truth is, we give you folks some really cool stuff. So get your name in the hat end of June for the June Pro Trading Crate, theoptionsinsider.com/pro. Of course, all of the 200 plus exclusive episodes waiting there for you. A lot of early tastes of content as well before everybody else gets it. All sorts of fun. And of course, the cherry on the top, the Pro Trading Crate. Don't miss it. theoptionsinsider.com/secret club. Don't tell anybody. It's a secret. What's not a secret, though, is who is joining us on the old program today. First, let's go out to the dark, stormy, but surprisingly smoke-free shores of Maine, even though he is literally a stone's throw from the border of Canada. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to ye old program, sir.
I feel like it's been a while since the Vol Views. I know Sebastian loves this show, so he's always like, I'm doing the show.
The meatball's just been gobbling up this seat lately, been elbowing you out.
He has. I believe he is in transit to said Chicago. And you know what? Maine, we don't brook with that sissy Canadian smoke, so we just ignore it.
He's able to get into Chicago. I'm hearing horror stories of people not even be able, all flights being diverted and stuff because of the smoke. So,
I have no idea. I did my flying last week, and I will not do it again for a very long time.
You did your one flight every decade.
Yes, I only visit my mother, who is recently widowed, so that's the only reason I will fly now forever.
There you go. And occasionally to Chicago to see me, but that's about it.
And occasionally to Chicago to see you, because you give me a T-shirt.
And then also once in a while when you come to Chicago, you see this person, our guest today, the once future and indeed now present. He has the piece of paper. At least he tells me he does. I've never seen the piece of paper, but he tells me he has the piece of paper saying he is now the present Dr. VIX as well, a.k.a. Mr. Russell Rhoads, holding court down there at the KELLEY School of Business, educating all of those future bright minds about them, our derivatives. Mr. Rhoads, welcome back to the show, sir.
It is so funny. I'm going to be positive, and then I'm sorry, but I'm going to have to criticize you and be a little negative before we're done.
Let's go for it.
First off, my kid is staring at me through I'm on a podcast, honey. Thousands of people are listening. Go do whatever you're going to do. Sorry. You like that? Oh, no. If my kids come in here when I'm teaching a class and the camera's on, they're on camera. That's how they learn not to walk in here. All right, back to where I was. First off, it's weird you bring this up, but I actually just hung my PhD on the wall. And because I like to tweet and I like to humble brag, I will tweet a picture of that out for proof.
Okay. Documentary evidence. We will finally have it, yes.
Okay, and I've done this for a decade, and I've never offered any advice to you ever. Mark, don't do the Joe Biden whisper thing on microphone. That's who I thought of when you said that.
See, I got both of you. I got the Rock Lobster, and now I got Mr. Dr. VIX, just going political. As soon as the show starts, going right there. Let's just keep on rolling instead, listeners. Maybe I'll whisper for the rest of the show just to make them happy. As we keep on rolling, right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, of all trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the end of the week, we are seeing a heck of a lot of green back on the screen. So our dalliances with red last week and the beginning of this week seem to be in the rearview mirror, at least for now. The S&P up over 1%, almost 1.25%. The NASDAQ up 1.5%, and the Dow closing in up about 0.8%. All this going into what is effectively a holiday weekend. It's not quite because we are open on Monday, but then we have the July 4th holiday on Tuesday, a weird Tuesday holiday coming up, listeners. So intriguing stuff there. Normally going into this weekend, we'd see vol coming in, but now factor in a little bit of upside, and we're seeing vol pretty much back down to where we were this time a week ago after dallying with a little bit north throughout the early portion of the week. In fact, when we kicked off the show, we were at exactly a 13 handle in VIX. We were up about 1/10 of a point, so pretty much unched on the week. Let's give it some time. I think it needs to catch up to my vol prognostication, which I do believe is a little bit lower. But the show is young. We shall see how vol evolves. If it continues this pace, we could be right at my prediction by the end of the show. A VVIX 83 down 6, so coming in quite a bit. It was threatening triple digits not too long ago, and now coming back the other direction. VOLQ 17.5 down about 0.3 of a point. So a whole heck of a lot of nothing net week on week, even if in between we did flirt with some other more impressive levels. So let's go out now to the man who loves himself some whispering on a podcast, the once and future Dr. VIX. Mr. Rhodes, sir, what caught your eye out there in the markets this week?
I think the term structure has been, and I'm trying to pull up my term structure chart real quick. It appears that the August is coming closer and closer in line with July. And I saw some people tweeting about that earlier this week, saying they were going to short July and go long. Short August and go long July. I think they're probably feeling pretty happy about that. Also, it's kind of interesting that the curve's flat. It's kind of flat-ish going into the fall. Usually it's pretty steep, but you got September at 1767, and then you go out to November at 1897. Only about $1.30 there. That's going to get pretty steep if nothing dramatic happens and we get past Labor Day.
Intriguing stuff. Of course, we will dive into the term structure even more in a little bit out there, listeners. But first, we'll go out to the dark, stormy, some might say horrific, but oddly enough, not smoke-covered shores of Maine. Mr. Rock Lobster, what caught your eye in the world of volatility this week, sir?
Well, a couple of things. I added some of those the SPKX index ETFs to my ticker list.
Oh, there you go.
Yeah. I'm trying to find them right now because I just lost my ticker list. So
bear with me. I've got them because I just happen to have something up that has a list on them. If you give me 1 second, I got it.
But I found them, so those are SPKX ETFs. As far as VIX goes, yeah, I'm just agree with Russell. We have kind of a steepening contango. The premiums have come down somewhat over the last week. Premiums relative for this amount of time left to expiration. We have our highly technical option pit fair value indicator for where the VIX future should be. And it's just like, it's starting to look like a regular, like a stock market that's expecting lower volatility. That's what it looks like. I mean, we got a 3-day weekend coming up. There was a little bit of putting the weekend back in yesterday, it felt like, and now it's kind of come out again. So, we expect, and we've got a half a day. We have a half a day Monday. So there's a little bit of, vol in, vol out, depending. And at this point, there looks like a little bit of window dressing on a lot of the big tech stocks today, which has been kind of a nice little run. But from a vol point of view, it's a very boring, normal looking contango curve, and it's getting a little bit more normal as VIX gets back to 12, and the future premiums, kind of get to wherever they're. I look at a historical forward vol average, and how much out of line they were historically. So for a long time, they've been relatively expensive. Maybe just because the vols have been higher. I'm not sure exactly why, but now they're sort of coming back down into what I would call a more something that I have observed more prior to COVID than post-COVID. So this whole vol regime that we were in for COVID, we're almost out of it until we can actually hold some the 12 handle for a while. I would just call the COVID thing done. But it's been as far as like how I follow vol, because I follow it by sort of like a vol regime. And then I define that by you're in a vol regime until you make the prior low after a gap. So we're right now in a 3-year gap still from where we were. We have not been able to maintain a 12 handle yet. So there's still whatever's going on is still going on. There's the Fed, there's inflation, there's all kinds of stuff that got heaped on top of the pile. But from the last, I would say, big spike, we are still on the way down from that big spike, as hard as it is to believe 3 years later. So, but we're getting there. I mean, everything is pointing to us wanting to get to that lower, to a lower number and stay there. But, if we keep rallying 1.2%, VIX is going to stop going down. So I think that's where we are from a vol point of view. So, if people are wondering why isn't VIX 20, because realized vol is about 50% or 40 or 60 or 70% of what it was last year in the S&P 500. So we've had huge decreases in all that stuff, and the market is just starting to appear like a normal equity bull market. I hate to say it, but that's what it looks like.
By the way, sir, your tickers you were looking for, good old SPKX, that's the 1X flavor. And then Spiky, good old Spiky, the 1.5, the little bit more jazzy, a little bit more jazzed up ETPs. We haven't talked about them in a while, but they seem like they're starting to get a little bit more intriguing. What was it that made you add them to your watch list, sir?
Oh, it's because I'm starting to collect stocks at 1-year lows.
Oh, well, there you go.
They were there.
And they popped up there.
VXX. So, I mean, I'm not buying them yet, but I just, once you get to this, a market, which I would call, or, we have been kind of in a bull market. I don't know if you call it a bull market, but it's certainly swinging up from the bottom now for a while. So when so many stocks are starting to just move in one direction, like clearly the momentum is still with all the, Apple, will cover that on Options Oddities, but like a guy buying 100,000 calls yesterday, and somehow Apple jumps almost 2% on the last day of the quarter. It's like magic. But you start looking at, okay, what is the market ignoring? So I like to see trends of what the market is ignoring. So I start collecting all the names that are at 1-year lows. So the market's ignoring. Obviously, the vol ETPs are all at all-time lows. A lot of mineral stocks, a lot of natural gas stocks, and a lot of surprisingly drug makers. So you never know when you look around to start, because that's generally stocks that were higher a year ago can get back there. So I find it a lot easier for stocks to go back up that way. So that sets up option plays and things for me, for my students. So you got to start with names that can go a long way. So, I don't know how much higher NVIDIA can go, but I would not get in the way of any. I would not get in the way of any of those stocks. Apple, NVIDIA, whatever, Microsoft. Who knows how high they'll go? But I also want to look for other stocks that could have a 20 or 30% return year. So that's where I start, and that's how I came up with those names.
Yes.
I was looking at the bottom of the barrel, sadly.
You have good timing because both of them hitting new 52-week lows today. If you're wondering, listeners, our old friend SPKX at a 965 right now, so a new 52-week price low there. And not a lot of options paper there, which is why we haven't really touched on it again in a while. A good old Spiky, though, getting a little bit more active. Obviously, it's continuing to erode 543, so think of it as kind of like a UVXY out there, listeners. But this one actually looks like developing a little bit of options paper. The ADV is up to a whopping 90 contracts. I mean, it's not euro dollars, but then again, it's also not the zero that it used to be. And it looks like there is some paper open there, including 436 of the D21s open up in SPKY. Spoiler alert, I don't think they're getting there anytime soon, but hey, crazier things have happened for those. So intriguing stuff. So a little bit of paper starting to float its way into good old Spiky, which is always fun to see as we keep on rolling into what Mr. Rhodes was just talking about, all things vol surface right now, coming into showtime. As he mentioned, It is pretty flat. We're seeing that front portion of the curve kind of moving in lockstep. July down almost 0.9 of a point from where it was this time last week, about 0.85. And August down almost the exact same amount, down about 0.9 out there. So we're starting to see this whole curve shift down and the front portion just kind of moving in lockstep out there. Obviously, June went off the board recently, so no more June out there. But intriguing stuff. And if you look across the term structure all the way out to the beginning of next year, let's go out to February, you're still below a 21 even out there. About a 20 2/3 is about as high as we get. So they are doing their darndest, as the Rock Lobster alluded, to wring all of the vol possible out of this marketplace. Mr. Rhodes, you kind of mentioned at the top of the show that what's really catching your eye out there right now is the term structure and just how flat it is. Anything else really catching your eye out there in the vol surface this week, sir?
Not really in the vol surface. I've gotten some questions about VVIX and why it holds up better than spot VIX. And I think when we start talking about trades and where the interest is in options over the past couple of weeks, which is mostly buying calls, take advantage of VIX being at low levels, that's one of the things that keeps VVIX from mirroring the down move in VIX. In fact, I think VVIX was lower than where we are right now. Yeah, back in early March, it was well under 80. We're above 80 now. And back then, VIX was not. I don't think it was approaching a 12 handle in early March, if memory serves me correctly. I don't remember a lot from early March, so you guys have to help me on that one.
What could have possibly impacted your memory between now and early March?
We don't want to talk about that anymore. So we talked about that ad nauseum. But you know what? VIX was at 1960 when back in early March, when VVIX was around 76. Now VVIX is a little bit higher, and VIX is 6 points lower. That's where I was going with that.
You got me scared at first, and you said people were asking about good old V stocks. I was like, "Oh no, I'm
getting a lot of questions about that. I get questions about that too.
Is Putin launching another invasion? It seems like the only time anybody cares about V stocks is when Putin is up to no good over there in Eastern Europe. So intrigued. I would love to see V stocks do more paper, like I'm talking about Spiky. I like to see all these products do more paper. For whatever reason, V stocks only tends to shine when horrible things are happening on the European continent. But a conversation for another day. Mr. Rock Lobster, sir, what's catching your eye out there in the ever flattening term structure, sir?
Well, I kind of already, expounded on that. Hard to, when Russell's here, he kind of covers things pretty solidly. So it's hard to beat Dr. VIX at his own game. But no, it's just wondering if we can actually hold some of these lower numbers. But yeah, the term structure is flattening out. It's getting pretty normal. Another thing too is like the back end now is right around 20 again. So, way back when I first started with Mark, I just remember, the back end of the term structure is always stuck to 20 and it never really moved from there. And the front kind of moved around a little bit. But if you look at like the last year where the back end of that curve was hugely bid. And I think the biggest thing in the last 6 months, I was just looking at if I looked at VIX on January 1st, and I want to just do a little historical thingy here. Like the back end was kind of pricey at the beginning of the year, as I recall, because there was still multiple questions about what was going on. Yeah, so I go right into expiration. Let's see. So I think just vol overall has been pulled down tremendously. So in January, when we were, midway through January, when the market was rallying pretty good, the back end of the curve was almost 25, and today it's just under 21. So all the vol has come down, again, considerably, with VIX coming down as well. So, and that was kind of a January curve was very steep. So I just think overall the amount of vol coming out of of the equity markets has been considerable since then. So that's kind of how bull markets happen. You need you need vol to come in, and all of a sudden the sell-offs just aren't that big anymore. I mean, they happen, they still will happen, but the market is no longer expecting them to happen, and people are no longer paying up for puts anymore because they don't work. I mean, if you're buying SPY puts or SPX puts, you would have to be Johnny on the spot to get any kind of good close on them in the last 2 or 3 months. So it doesn't mean it can't happen. And we did have all that, the banking crisis, which I believe lasted all of 10 days. So we have our head income trader, Bill Griffo, and he's like, oh, well, the Fed just says, okay, you can change a bond in for cash anytime you want if you need it. Here we are. And that was it. Crisis over. So I don't know, like this, it worked. That's all I'm saying. Stocks went straight up. What else are you going to say? So, and onward we go. Someday we'll have to pay the bill for all this, but it ain't today. And the vol curve saying it ain't tomorrow either.
It ain't today, sir. That's definitely not the case. But what we do have to potentially pay the bill for, or at the very least regale the saga of, is, of course, Russell's ongoing odyssey that is his VIX upside trade. It was all kicked off by a question one of our pro listeners had for him in one of our pro Q&A sessions. I believe at the end of last year, the question was, if VIX was going to pop, let's say up to 30 or beyond over the course of the next 6 months, how would you plan for that? How would you prepare for that using VIX options? And it kicked off this ongoing saga. Russell didn't just go out and buy the June 30-40 call spread. No, he did a little bit more work than that. He went out and actually traded and rolled, had risk reversals on, and was constantly evolving, and also writing about the saga over there on his Substack. So hopefully, if you follow him, listeners, you've been checking that out. But Mr. Rhodes, June is now in the books, at least from an options perspective. One more day for the trading month here. But intriguing stuff nonetheless. I am sad to report that the much anticipated VIX upside did not materialize, sir. So walk our listeners through the saga, how it came to a conclusion, and maybe what plans you have going forward for the rest of the year, sir.
Well, first off, and you usually help me on this one and say, and this was not your idea, Russell. It was somebody else that was looking for a spike in VIX, and I didn't necessarily agree with their outlook, but I took what their outlook was, and it was actually, I did the Pro Q&A on December 8th. And right after that, I was like, well, why don't I was asked, how would I go about preparing my portfolio for a spike in VIX? And the first thing that you want to do is you want to make sure you've got exposure to the near month contracts, because they give you the most bang for your buck when VIX moves up. They have one of the things that I came up with while we were at SIBO was the delta of the VIX future relative to the index. And that number's around 50 or 60 at best until you get about a week before expiration. And then it pops up to around 80 or 90. It's just amazing how it sits around there and then waits till we get close to expiration. But that means you want to be in the front month options. And one of my favorite structures is taking in a credit for a put spread and buying a call, or taking in a credit for a put spread and buying a call and then selling a farther out of the money call if the premium wasn't so hot on the puts, which it generally is not. In fact, I had somebody that commented on one of the blog postings, actually the last blog posting, and they noted that my short put strikes in implied volatility was around 21%, while the call that I was long in the spread had implied vol of about 140%. Which means you're selling a cheap option and buying an expensive one.
Welcome to VIX.
That's
for whoever pointed that out.
Yeah. Well, but the thing with respect to that is that call implied vol, it actually starts climbing as we get closer to expiration, because those options do hold their value, which is one of the benefits behind that structure, where you sell the put spread and you own a call, and it's probably still got some value even a week, even the Friday before expiration, which is when I normally do my rolling trades. So the outcome of all of this was 1, 2, 3, 4, 5, 6, an initial trade, 6 rolls the Friday before expiration in December, January, February, March, April, May, and June. The question was a spike through June, so I did not roll to July, which I'm kind of happy about at this point. One time, one of those 7 trades actually made money. The March expiration, which kind of coincides with that time frame that I was just talking about in early March, where where VIX was somewhat elevated, I think, on the Silicon Valley Bank thing. That spread made $2.35. The rest of them lost anywhere between 6 cents and $3.70. And the net result of all 7 trades was a loss of $8.44 per spread, which, again, this is something that you put on for a spike in volatility. If you don't get it, you do expect losses. I'm not happy with how substantial those losses were. So what I did after I completed the trade, I went back and I took a look at, well, what if I just bought the 50 Delta call and didn't go through all that trouble? Well, if I had just bought the 50 Delta call, I would have made money on one trade and lost money on the other 6. And the net P&L would have been a loss of $8.91. So there wasn't a whole lot of advantage going through that extra trouble and not just buying an out of the money call. Start to think being clever is not worth it. I'm going to do more work on it. And then I also took a look at buying the 50 Delta call and shorting the 25 Delta call. And part of the attraction there was, VIX had not gone much above the low 30s over the whole, basically ever since we came back down from the COVID thing. Any spike that we got in 2022 was low 30s at best, even though we were, rates were tightening the whole time. So those 25 Delta calls had a strike of anywhere between 26 and 40, depending on what was going on in the market. The net result there was 1 profit, again with the March spread, but the net profit and loss was only a loss of 396. So I'm starting to wonder if we should just be buying call spreads and not do all that stupid stuff with the puts.
Well, kind of what your friend pointed out there too, right? You're selling a little bit higher implied vol levels on those far out of the money calls. No matter which way you do it, you kind of point out one salient fact when doing any of this kind of hedging, quote unquote, with VIX is you have to have something to offset just buying the calls, right? You can't go out and just load up on the calls willy-nilly, because then your losses will be atrocious. Everything I've ever seen, all the analysis done for years at RMC, I've seen all sorts of funky ways to do it. Calendars, using puts like you did, using some sort of ratio, call verticals or flies, you name it. But it all boils back down, listeners, to finding some way to pay for some of that call, at least, so you can finance some of your seat at the table until you get that moment like maybe in March where you can actually make a little bit of money on these trades. But intriguing stuff. You did mention you're happy you didn't put it on for July. So is that it? Are we done? Are you going to keep?
We're done.
You're not going to keep analyzing for the second half of the year, sir?
Nope. The question was, are you going to do? And it's not laziness or anything. It's just that's what the question was. So I stuck with it. If anybody wants to throw a new question out me for the next 6 months, I am wide open.
So he's angling for a return visit to the Pro Q&A hot seat, listeners. And I guess the first question that needs to come in is, what about the next 6 months? And then we have content. So he can only act upon official questions from our Pro Q&A. If I just toss it to him here, that is not an official question, listeners. So bear that in mind. Get your questions ready. I guess our producers will have to book him post haste for a Pro Q&A coming up soon. So intriguing stuff. I don't think anyone expected it to work out, but interesting to see, the depth of the losses they're in. It is kind of just emblematic, again, of some of the challenge of doing this, whether you're buying VIX calls, whether you're buying S&P puts, either way, it's a challenging way to go. You got to find some way to finance that seat at the table, listeners. Otherwise, you're shedding dollars let's see what's going on out in VIX land. Like I said, VIX is shedding value right now. Let's see if it's putting up some numbers commensurate with that. And again, we're going into what is effectively a truncated holiday weekend. Speaking of which, we're getting some questions in the chat here. They want to know, are the markets open on Monday, and are there going to be shows on Options Insider on Monday? Option God is asking. And the answer is kind of yes and kind of no. The markets it's only a half day because of that weird Tuesday holiday. You know, usually we get a long weekend with these holidays. We get a Tuesday now, so the markets are only really a half day. So I'm not a monster here. I'm not going to make people come in and do option block and stuff. They want to have a long weekend. I think Tusaw is traveling with his family. I'm not going to make them try to come in and beam in on the show for when the markets are already closed by the time we'd be doing the show. So the markets are, yes, half open on Monday, and there will be no live shows on Monday. So just your notice there for OG and everybody else who's asking that out there in the chat. Let's get out to VIX land. And like we said, not a heck of a lot of paper going up, but maybe a little bit more than you might expect given the fact that we're heading into a effectively truncated holiday week. 489,000 contracts on the tape right now. The ADV is 809, so as you'll notice, moving back down in the wrong direction, down 27,000 contracts, I should say, from where it was this time last week. Still north of 800,000. Let's break down a quick top 10 out here, then I want to get into what all of you are here for. And by the way, I don't have that drop on this portable machine, so we won't hear you live folks won't hear Russell's weekly rundown. Hopefully you folks after the fact will be able to cut it in. But yes, no live Russell's weekly rundown drop this week, which is, trust me, I'm much more upset about that than you listeners. Number 10, 196,000 of the SEP 45s. Number 9, 218,000 of the AUG 20s. Number 8, 218,000 as well of the July 21s. By the way, you'll notice all calls all the time again this week, not a single put to be found. Number 7, 239,000 of the July 25s. Number 6, 245,000 of the AUG 25s. Number 5, 258,000 of the AUG 60s, 6Os. Number 4, 283,000 of the July 22s. Number 3, 291,000 of the July 20s. Number 2, 296,000 of the July 23, easy for me to say, of the July 23s. And rounding out our top 10 this week, 336,000 of the SEP 60s. So the AUG 60s and the SEP 60s topping out our most active strike list here in terms of the most optimistic, shall we say, strikes. And the SEP 60s taking the top spot here. Very intriguing. I believe that is part of that 1x3 we talked about a month and change ago here on the show. But you're all really here for Russell to break down the week. So, Mr. Rhodes, what you got for us? A little bit of the old Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
And now, for Russell's Weekly Rundown. All right, going through the list here.
Well, where's the music?
I know, that's what I was
I
doing.
just went through. I don't have it on the portable studio here.
There.
So the editors will have to cut it in after the fact. So the on-demand folks will get a little taste of it. You live listeners, unfortunately, will not.
As usual, I get screwed doing this show.
Umbrage.
As usual.
I know.
Umbrage for you, sir.
The umbrage crate.
You're the big you jog and you listen to that theme music, don't you? You just love it. All right, Monday. This is kind of fun. A seller of this. I almost feel like Elon Musk or SBF or some freaking goofballs behind this trade. Seller of 444 VIX, July 12th, 1450 puts. Anybody want to guess the price? 44 cents. Somebody really likes the number 4. The future was at 1571 and the spot at 1475. Not looking too good on that trade right now. Then also on Monday, there was a buyer of 300 of the July 5th, 25 calls at 11 cents. The future was at 1501 and the spot was at 1403. My automatic assumption was this was a short cover. It was not. The open interest was around 400. Now it's around 700. So, and then I went back a little bit and they've been buying these in small lots for a little while to work up to a position. They think something's going to happen over the
25. Wow.
I know the 3.5 day. I'm calling it a 3.5 day Independence Day holiday.
He thinks Putin's going to light things up over the holiday weekend.
Something is going to happen. So I'm not going out for fireworks or anything. I'm scared now.
Yeah, you're staying home now.
Now, so get this. So we had the seller of 444 of the July 12th 1450 puts. The next day, seller of 443 of the VIX July 12th 1450 puts at 54 cents. Doing a little bit better now. The future was at, the funny thing is, the future was at 15.15, and the spot had worked its way down to 13.62 by then. I've also got a seller of the VIX July 5th 18 puts for 355, who bought the July 5th 14 puts for 38 cents. They got a credit of 317 here. They need the market, above 1483 to break even on this. If we get July 5th VIX settlement on next week of 18 or higher, they get to keep that whole credit of 317. But again, another bullish trade using the July 5th options. The future was at 1461 and the spot was 1370 there. No more funny lots of the July 12th 1450 puts. That's what they did. On Wednesday, somebody sold 4,995 of the July 5th 22 calls for a nickel. That does appear to be a short cover. I hope that's a short cover.
I'll say I hope that is. Otherwise, he needs to talk to that other guy who bought a bunch of them expiring for 11 cents on the 25 strike. They need to have a conversation.
Unless it's the same person who needs to go look in the mirror for a while. Also, somebody in two different 2,500 lots, sold the July 5th 24 calls for 3 cents and 2 cents. So we'll say 2.5 cents. That was an exit as well. Even though it's very unlikely that VIX is going to be over 24 next Wednesday. I think if you had shorted those and you get out of them for 2.5 cents, get out of them for 2.5 cents. Yesterday, Thursday, somebody sold 150 of the July 26th 15 calls for $1.67. The future was at 15.92 and the spot was at 15.55. Kind of a tight spread between the future and the spot there, considering July 26th, that far out. And then finally today, there have been a couple of trades I really couldn't get a handle on, but this is an interesting trade. Somebody sold 250 of the July 5th 15 calls for 13 cents and bought 250 of the 18 calls for 3 cents. The future is at 1400 or 14, and the spot was at 1303. Can't tell because we're not seeing the day-over-day change in open interest. I think this is a cover, though. I think somebody is getting out of a bull call spread they had on and have just decided to throw in the towel and enjoy the long weekend.
And we all enjoy a little bit of Russell's weekly rundown. Well done. I do like all that July 5th upside going on up there. That does make me wonder what's cooking over the July 4th holiday. Intriguing stuff here, listeners. It's always fun to have Russell's weekly rundown here on the show. Let's get out some of the big VIX mothership rundown now. Like we said, today, not exactly a banger day. A little bit shy of 500,000 contracts on the tape right now. The big dog today, 61,000 of the July 15s going up out there today. Interesting strike. Right behind it, we have 40,000 almost exactly of the October 45. So less interesting, more head scratching there. Number 3, 30,000 of the July 20s. Also 30,000 for number 4 of the AUG 47 halves. And then rounding out the top 5 today, 23,000 of the July 15 puts. So the 15 strike all the rage out there today. Yesterday, pretty freaking anemic day. We haven't seen a day this light in a while in VIX land. This is more, I would say, a late August kind of volume day or heading into a holiday weekend, which we kind of are. But you might expect to see this paper today as opposed to yesterday. 360,000 contracts on the tape, so a very light day. One of the lightest days we've seen in VIX in some time. The big dog, such as it was yesterday, about 22,000 of the July 21s, followed by 20,000 of the AUG 14 puts. Number 3, 15,000 of the July 30s. Number 4, 11,000 of the July 47 halves. And rounding out the top 5 on a pretty anemic day, 11,000 of the July 45. So maybe a bit of a vertical there, 45, 47 half, 11,000 times, in which case I think the Rock Lobster would call that a kiss in your sister trade. Wednesday, 680,000 contracts on the tape, so a little bit more action. The big dog on Wednesday, 44,000 of the July 17s, followed by number 2, 35,000 of the AUG 25s. Number 3, 34,000 of the November 40s. Also interesting. So if the AUG 45s didn't interest you, allow me to submit the Nov 40s for your perusal. Number 4, 29,000 of the July 18s. And rounding out the top 5 on a decently active Wednesday, 25,000 of the July 13 puts. Easy for me to say. You will notice so far, listeners, we have not eclipsed that ADV, which is why it's moving in the wrong direction this week. Tuesday, 566,000 contracts on the tape. The big dog, 25,000 of the July 14 puts, followed by 24,000 of the Nov 47 halves. So there are some interesting upside strikes sneaking in here this week. Number 3, 17,000 of the July 18s. Number 4, 17,000 as well of the July 15 puts. And rounding out the top 5, 16,000 of the October 50s, the 5-0s. And Monday, 463,000 contracts on the tape. Most of that, 75,000 coming in the November 47 halves. So yeah, a smattering of very interesting strikes sneaking in here this week, followed by a distant number 2, only 28,000 of the July 30s. Number 3, 25,000 of the Nov 30s. A lot of 30 love on Monday as well. Number 4, 16,000 of the July 15 puts. And rounding out the top 5 on Monday, 15,000 of the July 16 puts. Mr. Rock Lobster, anything catching your eye out there this week, including what are your thoughts on some of these funkier strikes? 75,000 of the Nov 47 halves. We have the Nov 40s going up 34,000 times. We had my favorite before, the October 45s going up 40,000. So a lot of interesting longer-term upside going up this week, sir. What say you?
That stuff has always been a curiosity to me. Well, because one is I like to play in the 30 to 60-day VIX because that long-term stuff just is a kind of, I just don't have the patience for it. Like I could be dead by the time those calls perform. So, you know, I realize they must be structuring something kind of more long-term on it, or they're like Matt, you know, he likes playing out there too, because it's most of the money is made by you just get a like vol just blows up and, you know, and then the calls become something. So, I mean, I can see that also. You look at the Nov 30s being only $1.30. And just from a historical perspective, like, how am I going to lose on those? Because it would be rough to believe you wouldn't get some kind of move to the mid-20s, and then those things would pay something, right? Probably double, maybe triple.
There's Russell's next 6-month vol trade right there. Just buying the Nov 30s, bam, done.
Yeah. So, yeah, and I, you know, in my, so for a lot of the stuff I do, I like because I like the fact that you get so much future premium in the front end, and it just melts so fast, you know, on a weekly basis for a trade, and that finances a lot of my other shenanigans. So at least from a put side, I trade VIX kind of probably the opposite everybody else does. I just view VIX puts pays for all kinds of other stuff, and then I take that money and I go spend it on other things. So as long as we're in contango like this, I buy as many VIX puts as I can, and then I go buy SPY puts and SPY calls and VIX calls and just have a smorgy board because I figure VIX is going to pay me big money down the. Will it finance some of this other, let's just call it less informed style trades? So this came from an idea that Russell gave me like 5 or 6 years ago when he said, you know, when that future premium is X over a normal number, that's when I started doing a little more fudging around. And I'm like, wow, yeah, you could actually buy some stuff with that. So anyway, it's all Russell's fault, but I got to think it was a good idea. Anyway, what? He's like, well, wait, I was invoked. What are you talking about?
No, I'm listening. I'm just I didn't want to interrupt you.
So as far as this far term stuff, like I don't know what people do. Maybe they're, you know, and I could see you're like doing some of that, maybe buying some long-term SPY calls or something of that nature, like kind of long, and just sort of let the movie play, so to speak. That could be reasonable, but as you know, a lot of times with some of this stuff, I see it go up. Like Russell was, it's like kind of you just shake your head and go, what the hell do I expect to happen with that option trade? But maybe they have insights that I do not know.
At the end of the day, we can just say for every episode, it's always Russell's fault. At the end of the day. And you know what? Speaking of what
just like my household.
Yes. What clearly is your fault is getting our listeners into SVIX, which I guess is a good thing because this thing has done nothing but hit new highs, Mr. Rhodes, since we started talking about here on the net. 28.25 right now, up another 1.5 points. So that's probably another new all-time high. I haven't checked, but if not, it's pretty freaking close. So SVIX continuing to print money for the once in future Dr. VIX there. 3,100 contracts on the tape today. What caught my eye, though, kind of interesting. I saw there's a big print going up today of a couple of thousand of the AUG9 puts. Someone's blasting away at the AUG9 puts for a dime. I don't know what surprised me more that people are selling the puts out there or that they're getting a dime for the AUG9 puts. That's not a bad level. So, I was intrigued by that for some reason. That kind of caught my eye. So if you want to join that partay, listeners, 2,000 of the AUG9 puts going up for a dime right now. I think a lot of people would pick up some SVIX back around a dime. Maybe it's the same guy, Russell, who's buying all those July 5th upside. He's also selling these puts in SVIX. He's like, hey, I'll pick up some SVIX down there once VIX explodes and SVIX is wiped away. So what's catching your eye out there in your chief holding SVIX, Mr. Rhodes?
In SVIX, I continue. Wow, I'm looking at somebody just sold a bunch of the 37 calls that expire next month in that market as well. Goodness gracious. I think short vol makes sense for a long-term hold. Hopefully, unlike Andrew, I do think I'm going to live a little bit longer. So I'm okay with a long-term holding like that. I've heard you mention when I'm not on that I do periodically sell calls against it. I never sell more calls than a quarter of my position against it. So I always have a position in there. In fact, right now I don't even have short calls against a quarter of it just because some of them just expired last week and I haven't really gotten around to figuring out what price level I'd be willing to sell new calls at. I got a couple of 28s in July that are short, and that's about it right now. So there, I wouldn't mind seeing. I don't know what would cause me to sell more calls at this point. I'm having a very difficult time coming up with any real reason that we're going to get a volatility spike in the next couple of months, but typically that's when it happens. So I really didn't even want to say that out loud because it might come back to haunt me. But of
course, that's also you selling the 2,000 of the AUG9 puts for a dime today, right? That's probably you getting in some more on the downside there.
That's me and Mr. Buffett, our favorite ways to work into longs. Sell puts.
Your favorite way indeed. One of was formerly our least favorite. Now people are loving it again. It's VXX. Giving up the ghost again this week. I saw our buddy Jim Carroll tweeting about how weekly puts in VXX have been paying off huge for every week for the last couple of months. So he's loving them out there, or somebody is. He's retweeting. VXX 2480 when we kicked off the show, down about 1.5 points. 28,000 contracts on the tape. The ADV 66,000 unchanged. I'm kind of flying through this, listeners, because I want to get to some of your questions and comments for the crystal ball as well. Really quickly, the top position right now in VXX is 21,000 of the July 40 calls. That caught my eye because that's new. That was just opened this past week. Somebody came in and bought 20,000 of these bad boys for prices around 30 cents. So, you like those, listeners? The VXX July 40s for 30 cents? I don't know. VXX seems hell-bent on moving aggressively in the other direction. If I was going to play a vol pop, I don't know if VXX is the vehicle I would go for, but somebody clearly wants them. 21,000 of these bad boys open right now. That's the top position for size in VXX. I'm curious what you folks think. Speaking of what you folks think, really quickly, let's get to a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, a bunch of questions to get to. We got a bunch coming in the live chat, too. So obviously you folks get bumped to the top of the list. Let's go here to people asking about the markets. We already talked about that. People saying the holiday weekend, Nichols kind of agreeing with us, this Tuesday holiday is making it a little hard to trade vol right now. Yeah, it's a little weird, this kind of Tuesday day, and then, of course, the half day on Monday. Russell, folks are loving you in the live chat. Option God saying it's nice to have Russell back, and also saying he's noted that he needs to ask that question again for your next pro Q&A. So look forward to that question coming back about all things next 6 months, hedging vol, hedging VIX. Frank1209 says, good to hear about SPKX and Spiky again. Haven't talked about them in a while. Yeah, you're right, because they haven't really been doing a lot of paper. But now that they're at least Spiky doing a little bit of something, maybe we can move them into the rotation again. Of course, we had the Spike's father on the pro Q&A recently as well, Mr. Simon Ho. So listen to that if you haven't heard that, listeners. And then we got Z2313 saying there should be a forum where buyers and sellers can connect, debate, or do an in-person deal. You're going to meet in the back alley, say, hey, you got those VIX puts? Yeah, here you go, boy. That would be interesting. But there are obviously, if you're doing a decent amount of size, you're going to get shows from brokers. So that's kind of where most of that stuff happens. On IM, on things like that, where they're giving shows to their standard clients. So if you're doing enough size, Z2313, you will get those shows. Fortunately, if you're out there doing the 10 lots, not really. But we are talking about adding a Discord to this, so that could certainly be a forum where a lot of our traders can talk. Can't really trade in person, or can't really execute trades amongst each other that way. You can't match them up, but it could be interesting nonetheless. Nichols likes that idea. He says he likes that. He wants to have that in person. The notion of trading your VIX in person in a back alley just brings a smile to my face. Of course, everyone could go down to the VIX pit. I was just down there recently with the flow mass. Not a heck of a lot going on down there, but intriguing nonetheless. As we keep on rolling, we're coming up against it. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Let's get right into it. I wanted to go higher last week, and I held myself back. Listen, I kept myself at the 1260, and lo and behold, VIX still hanging out a little bit north of 13, right about a 1310 right now. So no joy for me, no joy really for anybody. Mark was fading it to the downside. He was doing his palindromic nonsense at 1221. Mr. Matt, the Oracle of New Hampshire there for 1340 on the show last week. So no joy for him. Looking at some of our live listeners, I don't see any exact 13 handle. Nichols had an 11 handle. Man, my goodness, you were really fading ball last week. No joy for the pro listeners. I'll have our producers go through and make sure that there are no winner chicken dinners. Matt was the closest, such as it was. He and I were kind of equidistant on different sides, really, but no joy for either of us. That means our guest, Mr. Rhodes, gets to go first. Mr. Rhodes, what are you thinking for this time next week from a vol perspective, sir?
Oh, now see, I want to. 1331, just to be like Mark Sebastian.
I was going to say, are you wearing the Mark Sebastian hat today? Is that what you're doing?
I am.
Palindromic nonsense. It doesn't work for him. Why not try it for yourself?
Yeah, I've tried everything else.
Why not? Let's go. Let's all do VIX palindromes today. Mr. Rock Lobster, sir, what are you feeling for this time next week?
I don't know. I wanted something historical. When was the Magna Carta?
Oh, geez. I think
was
that
it
was
1218.
I think that was like 1300. I was going to go with 1300, something like that.
Oh, really? I don't know. I'm feeling
1215.
Oh, there we go. 1215.
So that's where we're going.
June of 1215.
Oh,
1215. Right. I'm going to say we're out of this whole regime, and that's it. 1215.
All right. I was going to do the palindromic nonsense fun as well of 1221. But since you're going 12:15, that kind of that doesn't give me a lot of joy. So you tell you what, I'll give you a little bit of breathing room, sir. I will bump it up a dime. I will go 12:31 to give you a little bit of breathing room. So there you go. I'm a point exactly below Mr. Rhodes. I'm about 0.16 above the Rock Lobster. The Magna Carta. I did not think that was going to be.
And the listeners all know what that's called.
Our vol.
At least you had the guts to scum me for 16 ticks and not just one.
Never let it be said I was not a nice guy. I let you roll along. 12. I was going to think it was 1300, so 1215. There we go. 1066, obviously the biggest date in English history. Everything outside of that kind of just fades into distant memory. But there you go, listeners. Our vol inspiration for this week, the Magna Carta. All right. With that in our hearts and in our heads, that will conclude our broadcast week. For you on-demand folks, for you pro folks, hang out. I'll be back in a little bit with the once in future. Actually, no, I'll take it back with the.
Oh, not me.
With the rock lobster to break down all sorts of vol fun. But before we go, Mr. Once and Future Dr. VIX, if folks want to check out your Substack, which will now be disappointingly blank, no vol trades to update.
I know.
What are you going to write about?
Talk about? No, I have a Substack under my name, just russellrose.substack.com. I'm close to officially landing somewhere new, even though I'm officially still with EQ Derivatives. Hopefully I'll have something really big to report the next time I'm on with you.
There you go. I look forward to that. And of course,
really big.
We already have your first question ready for your next Pro Q&A section. Option God already has it queued up. So get ready for that next 6 months of upside VIX hedging, sir. It's coming. Coming your way. And I keep getting you guys confused today. Mr. Rock Lobster, sir, when you're not studying English history, where should folks go to learn more about your vol musing, sir?
Yes, vol musing, vol trades. We have so many, like OP mentoring now, Trade Desk. I got the weekly profit cycles and money map, and our pro course. All that stuff. Oh, my gosh. So optionpit.com, 888-TRADE-01. And if you listen to this show, because we like Mark Longo and his option radio conglomerate, global empire, we'll call it. You get 10% off. Just say you listen to this show. So 888-TRADE-01. Our customer care team is there to help.
They're there to help, and you too can debate the signing of the Magna Carta with the Rock Lobster over there in the land of the pit. Looking really quickly, we got a lot of 12 handles coming in our pro. We've got some 13 handles popping in too. 1340 for Option God. Frank's at a 1270. Nichols 1310. You had 11 handle last week, listeners, or Nichols, so you're popping up a bit. Options Queen, she's been scarily precise. She's at a 12. Everyone's hanging out close to that 13 level. Interesting. She's saying that's her outlook, not for any other silly reason like the Magna Carta. So there you go. Just clarifying that. I love all of that. I want to thank all of you for joining us this week from the Southern Studio. Like I said, for you on-demand folks, that will conclude our broadcast week. For all you pro folks, hang out. I'll be back in a little less than an hour with the Rock Lobster to break down a pretty intriguing week. I know he's champing at the bit to break down all those Apple calls. We'll get to that and a whole bunch more coming up on Options Oddities. You folks can check it out if you're not on the pro side. TheOptionsInsider.com/pro is the place to go. Otherwise, remember, no shows on Monday. Market's kind of truncated. We got a weird week, and I'm not a monster to make people do shows on those days. So no shows on Monday. But we're back again next week with our regular slate of shows, I should say. On Wednesday with good old Options Boot Camp. Thursday, of course, our usual offering. And then back again on Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.